Robschild, no investment advice. Welcome to the show where we view financial markets through crystal ball gazing. Again, I have a lack of technology and equipment, but I'll just go through the main points. Today is Wednesday, July 10th, 2024. The S&P 500 is, just from a pure charting basis, if you only look at the price, it looks very bullish. However, it's my understanding it's on very, very light volume. This is what's called a melt up. I believe institutional money is waiting on the sideline for some kind of catalyst to really crack it and give a reason to flush everybody out. And there's a lot of people waiting to make money on the way down. Part of the reason it's going up is people are getting too early on the shorts, and then it's melting it up, and people are getting stopped out of their shorts, pushing it higher as well. And so it's crazy what's going on. But anyway, we are back to greed mode in the CNN Fear Greed Index, I noticed today. But yeah, the Qs, SMH, semiconductors are now at a new all-time high, I believe, today. The NASDAQ UQQ, again, low volume, everything going up. My only comment on this right now, as it stands, the higher it goes, the harder it can fall, in my own estimation. Main news today, Powell talked to the House. There's nothing really to see there, nothing to talk about there. There was a 10-year note auction today. So I don't really believe in the significance of these auctions as much as other people, because it's based on what the secondary market is currently pricing these securities at, and based on what happens in the auction, is it doing better than what the market says or worse? It's like, well, that's only compared to what the market says, so I don't really understand the significance of it completely myself. But supposedly it went. It looked to me like it went pretty well. They were bought up at higher prices than expected. I'll add HYT, high yield corporate, had a small breakout to the upside. I had been talking about it coiling up tighter and tighter, and we broke up out to the upside. Apparently people want to take on higher risk for a little bit more yield, smaller and smaller difference of yield between guaranteed securities and higher risk securities. Credit spreads right now, in my estimation, are getting tighter than ever, and it's kind of crazy. I don't know what to think of it, really. And yeah, not much else to talk about today. Again, daily reminder, we are past the 2-year birthday anniversary of the 2-year, 10-year yield curve inversion, which has never happened before. So, it could potentially mean the worst recession or depression that the country's ever seen, but, we'll see what happens. What could possibly go wrong, as I say in every show, as long as people keep buying Nvidia stock and Apple stock and Bitcoin and all, and higher risk, higher yield corporate. None of it really makes any sense. Like I'm saying, the higher things go right now, the stronger the rug pull is going to go, and the way I see it, the more likely it is to be a stronger and worse drop on the other side, to go below where it really should go moving into the future. But that's just a guess. Anyway, again, tomorrow, CPI coming out at 8:30. That could be the straw that breaks the camel's back, so to speak. Maybe not. Maybe it'll be nothing. I keep thinking these reports are gonna mean something, and the market just shrugs everything off. Maybe they have the right to. Maybe I'm getting ahead of this. The real indicator that probably matters more than anything is the unemployment rate, and it's not at a worrisome level right now by itself. It's in a worrisome direction, going straight up as far as I can tell. But you know, yeah. So we'll see. We'll see. See how it all plays out. That's all I have. Hope you enjoyed. Thank you for watching. Robschild.